Hey, what's happening, my friends on YouTube? Hope you guys are doing well. This is Chris, the One Lot Warrior, coming to you live from YouTube, and we're going to record a little video here. So let's get to it. Today was September 1st, 2020. We traded today live account. We finished the day up about 25 points on the NASDAQ. I'm going to show you a few trades here, and I also want to show you a few things regarding the execution of Interactive Brokers Pro account, which in my opinion is quite good. So let's get to this video and get going here. All right, so right in the middle here, you're looking at my depth and sales for this market, NASDAQ futures, and it is running a CQG data feed. On the right hand side we have my IBKR chart. So let's get to this. I'm going to go to the point where I took my first trade. But one thing you should note is that I trade only one lots, all in, all out, and basically I'm looking for trading opportunities that present an 80% probability or more that the trade will give me profit almost immediately. Now, how do you categorize a trade as being 80% probability of profit right away or not? That's something that is quite subjective and takes experience to know how to do that. It requires you to understand volume profile and order flow. Those are the two things that I pretty much use the most in my trading. So let's get to this here. The NASDAQ was trending higher for the most part, and I want to show you the point where I almost took this as a long trade here when we saw this pullback and this double test of this area here, this 203 general, but I wasn't quite confident enough. And you're going to see the market caught some sellers around this 240. One thing I want to point out really quickly is that when we traded up there, okay, look at the amount of size that's coming into the market, going into these. The first attempt here, we had a lot of size trading into this 230 area. And then look at the amount of size that's coming into the market right here, trading at these 240s. So if you're watching the market prior to this amount of size right here would have stood out like a sore thumb. This is surely institutional big players doing some business, and you can see that there's a lot of size trading in here. So that is significant. That's things that I mark in. When I see a lot of size being traded at a specific price, I mark it in as a general point of interest. Very important to watch. Now, if we fast forward a little bit in the video, you're going to see that some selling occurred, and that pretty much marked our temporary top. I continue to watch the market here as we consolidated around this 220 general price. And what I noticed here is that if you look very closely, there's a gap in the price here where we shot up above this. We almost tested this price, but we didn't quite close this little gap here. That is something that I look for when I look at price actions, when I see that there's gaps in the price. So one thing I noticed right away is when we saw this little rally up to this 230 point, I was looking for a potential rally and then a reaction. All right, so one thing you got to understand about trading and scalping in general is it's always going to be the story of action and reaction. How are traders entering the market impulsively? What kind of action is taking place that's going to enter traders into position or get traders out of positions? All right, and these are things you have to look at. So it's the action reaction phase. All right, so a lot of times when I'm watching a certain level, I'm looking at how the price is auctioning around that price. I'm looking for a potential sweep in one direction or another, or two attempts and a failure, and then a regain of a specific price. That's just an example. Now in this case, you're going to see the price rally up to this 230 point. And then let's just watch the tape here. We'll take a minute here to watch the tape. So you can see how we consolidated sideways here around this 220. Looks generally pretty bullish, right? We're holding around this moving average. The market is slowly starting to rally up to this 230 point. There's some buyers entering the market. Now watch the tape here. So you can see how the market's not really having trouble trading higher, but just take a look at what's happening, okay? So by the size that's coming in on the tape right here, you can tell that there's not a lot of interest in this price from either side of the market. There's no big trades taking place here. So that tells me this is probably a lot of retail entering the trade here, thinking that we're going for another leg higher right away. So you can see how we start to reject this price, and we're kind of chopping around the 230 mark. Now let's keep watching, and you're going to see the moment where I start to get interested in this as a short. One thing I noted here was that the behavior on the tape was very slow. There wasn't a lot of big trades coming in here, meaning that this is likely a lot of retail. So there we go. When I see something like that, a big sweep of sells, and then the price moves lower, that tells me, all right, that's a reaction. That's an example of a reaction. Now I'm interested. I'm continuing to watch this action. So let's see what happens if we try it again to move higher. 233. Any buyers? Any takers? Any takers above 233? And it's struggling. So you can see right there, a couple more sellers answered, but the price is struggling to move above 233, and we're trading under 230. At this point, I'm saying, all right, can the sellers prove anything at this point? Can the sellers prove something? All right, so we saw some selling come into the market, but can they prove anything? All right, the way I'm seeing this is that longs just bought this dip. There's longs that are interested in the market, but there's also sellers that just answered here. And that if these sellers continue to be aggressive, then those longs who entered the market a little bit earlier are going to start panicking. So that right there. And I get into the market when I see these sellers come in and I get short right there. I get filled at 224. You see that on the bottom right side? All right, let's look at that fill again. And you're going to see an example of IB's order routing system and how good it is. So take a look at this, and I want you to look at how the order filled and how fast it filled. Just a one lot on the micros. Watch. Boom. I filled it at 224. I pressed the button and I got filled immediately. And you can see here that the price was already trading lower at 222 3/4. Now, I would make a bet, and I'm going to do this in the future as an example, where I take the same trade in two separate accounts, one of them in the IB Pro account with the adaptive algo, exactly like this, and the other account with a simple market order, and see which account gives you the better fill. I would bet that the IB account with the adaptive algo would give you a better fill. So if you don't know what the adaptive algo is, read up about it a little bit. It's almost like a market making algo. There's a scanning feature associated with a market order. So you submit a market order to the exchange, but it doesn't just submit your order and then fill you at whatever price the market wants to. It takes a second to scan for available prices and tries to give you a semi-good fill. And again, by semi-good, I mean probably better than a regular market order. All right, so you're going to see me get filled, and I'm looking for these sellers to continue being aggressive. And what ends up happening is they are aggressive. Very aggressive. So I'm looking for the price to kind of fill that gap I was telling you about earlier. And you're going to see me put in a limit buy here, and I get filled at 213 and get out of the trade. So a solid 10-point profit on that, and I was happy with that. The end. So after that, we saw this sort of action where we bounced once, we saw an attempt lower, a failure, and then a massive rally up to this 230. At this point, I wasn't interested in being bearish the market. One thing that is so important that I must crucially say, as the market is generating new information, you need to be nimble and move your levels around on your chart. So one thing I did today that I never really did before was that I was always very clear about my bull bear bias, right? So I have all my important levels marked in, and I'm also moving them around. As the market is generating new information, my levels are slightly changing. And this is so important. You need to be nimble and move around your levels like that based on where the volume's coming in and what kind of information the market is generating. So having a strict bull bear bias is so important in your trading. And if you want to be consistent, you need to be consistent with your bias, right? So when you're understanding the price action in a certain way, you need to collect enough information that's giving you a bias to trade in a certain direction. So generally, when it comes to price points, it's generally going to be something like, if the price is holding below this point, I'm generally looking bearish. If the price is holding above this point, I'm generally looking bullish. And you can go more in depth and say things like, if we lose this level and then regain it with strong buying, I am likely going to look bullish. This price has been holding on the offer for a while. If we trade lower and then regain the price with continued buying, I'd be interested in being a bull at that point. So that's an example of a simple if-then trading plan, if-then scenario, and simple trading approach that you can have. And these biases, you can have many of them in a trading session. All it's about is being nimble with them, and that's about it. All right, guys, so I think I'm going to leave it there for today. Keep this video nice and short, about 10 minutes. And I will wish you all a fantastic day. So I hope you enjoyed the video, and I wish you guys a fantastic week. Take care. Bye.